MicroStrategy has 600,000 Bitcoin.
Yep.
If the U.S. government wants to get to 1 million Bitcoin, or Qatar, or UAE, or I don't know, UK, okay, and they say, I'm going to buy 1 million Bitcoin in the open market, the UK buying 1 million Bitcoin, or the US buying, or China, Bitcoin's going to $1 million. The US government might say, MicroStrategy has 600,000 of this already.
Yeah.
I'll pay 200% premium, and it was cheaper than paying $1 million per Bitcoin. So that's called a sovereign put. Crypto is a narrative-driven space, okay? Because it really runs on trust.
Right.
And so we know Bitcoin, the thesis is trust and, digital gold. But I think the story now is programmable money.
If a major government decides to buy 1 million Bitcoin on the open market, the price could skyrocket to $1 million almost instantly. And with MicroStrategy already holding 600,000 BTC, that tipping point might arrive sooner than expected. That's the latest insight from Tom Lee, co-founder of Fundstrat. He sees sovereign demand as Bitcoin's next major catalyst. Governments are watching Bitcoin's rise, and if one moves to secure a strategic reserve, the resulting supply shock would be historic. At current liquidity levels, even a whisper of sovereign accumulation could trigger a parabolic surge. Stick around as Tom Lee breaks down his outlook and why the next explosive move might be closer than you think. Still paying taxes on your crypto gains? What if you didn't have to? With iTrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, iTrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOS7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with iTrust Capital.
Do you think retail participation is net good?
Yes.
Why?
I'll give you a perfect example. MicroStrategy. They've orange-pilled people. Like, people own MicroStrategy not because it's a security business, but it's because Saylor is getting me more Bitcoin per share. And so maybe what you're seeing is people are discovering that you not only want programmable money, but you want to be running on the biggest network that does programmable money. And Ethereum is 300 billion. So it is the largest smart contract blockchain. Crypto is a narrative-driven space, okay? Because it really runs on trust.
Right.
And so we know Bitcoin, the thesis is trust and, digital gold. But I think the story now is programmable money. Stablecoins are the ChatGPT of crypto because it's really crossed over into the mainstream. But it's really evidence that Wall Street is trying to equitize tokens.
Correct.
But then the crypto world is tokenizing equities because they tokenized $1, right? And then now you're seeing, JP Morgan wants their own stablecoin, Amazon, Walmart, Goldman. Well, stablecoins are a great business model and they work really well for consumers and merchants, but they all have to operate on a blockchain.
Correct.
And the majority of stablecoin transactions take place on Ethereum. Because someone's going to say, if I want to bet on Ethereum, why don't I just buy the ETF?
Right.
Or why don't I just buy it on chain and
custody or something?
Custody, right? Yeah. But see, a treasury company has 5 real important pieces of optionality. Okay. So if you buy an ETF or if you buy Ethereum on chain, your units held of Ethereum is going to be constant. Now, a second thing that got people super bared up, our institutions, was, Tom, the Fed's not coming to the rescue. They said the only reason markets rally is the Fed cuts rates and unleashes money. And actually, our argument was that's actually an illusion. So our belief was that you'd still get V-shaped even if the Fed didn't cut. But a lot of people were saying, look, the Fed said they're not going to cut,
right?
So we're going to actually keep falling,
right?
But instead, we had the V-shaped recovery.
Why were you able to see that it is an illusion to think to depend on the Fed to bail you out?
Well, I think it is an illusion because when the Fed is adding liquidity, it's just giving the money to the banks,
right?
So if the banks aren't lending, that was happening like after 08, they gave the money, the banks just built up reserves.
Right.
Like it wasn't sloshing around.
Correct.
So the more important money is actually retail. And that's guess, there's 4 cohorts, 5 real distinct cohorts in the market today. So we know there's institutional.
Right.
There's non-US,
Yep.
right? And
Foreign.
everyone's like, oh, we're leaving the US. There is high net worth.
Family offices.
Yeah, exactly. They stay bearish because they follow what hedge funds do.
Right.
Then there's corporates who do buybacks.
Correct.
And then there's retail. Retail was the only one buying the market at the April lows.
40 billion in March and April.
Yeah. I'm very proud of the retail investor.
Well, part of the reason they did is because they listened to you. So I guess the question here is, why do you think retail was able to see through? I mean, I know institutions have a fiduciary responsibility to sell, but why didn't they buy as heavy as retail?
I think it's because retail investors see this as a stock market.
Retail investors are stepping in where institutions are holding back. According to Tom Lee, during the April lows, while hedge funds stayed cautious and corporate buybacks paused, it was retail traders who poured billions into the market. They saw opportunity where the big players saw risk. Lee says he's proud of retail, not just for showing up, but for getting it right. In crypto, trust and momentum drive everything. And while the Fed may hold back liquidity, retail moves fast. That's why Lee believes the surge in retail activity is one of the strongest signals, yet that another major bull run is already taking shape.
A retail investor sees it as stocks,
Right.
but the higher up you go, they're more macro. They're like, oh, Trump's going to just drive us off a cliff. The Fed's going to kill us. And so these actually create biases.
Right.
And
Right.
then when the actual economy doesn't, or the stock market doesn't react to what their framework is, then they're like, oh, the market's insane. This is the dumbest rally. Only
Correct.
retail's buying it. So then they're caught off sides because they're now sitting on cash, institutions, on a complete full V-shaped recovery. And that's why it's the most hated V-shaped recovery.
Yeah, I mean, getting 4% in a money market while Meta's going up by 40%. How are these conversations? Because I imagine one of the reasons I was very bullish in 2023 is because you kept saying your institutional clients didn't believe in what was happening. And that was the wall of worry that you kept using to justify, no, we probably have more momentum left. When you talk with these people, do they just want to curse you out, but also at the same time, they want to say, well, thanks for letting us know it's time to buy?
Yeah. Well, compared to 2023 and 2020, the institutional universe is even more bearish.
Wow.
They're convinced we're late cycle. One thing to keep in mind is if you look at political affiliation in the equity market, 65% of fund managers voted for Biden.
I did not know that.
Yeah. So, but if you look at the bond market, it flips. The
Right.
bond market historically votes Republican.
Correct.
So most people think Trump is a madman, right? Because they didn't vote for him.
Are
So-
you saying TDS is one of the reasons why people did not buy the dip?
Yeah, we write about it a lot in our research, actually. So it's a partisan stock market. And actually, people... So these have been uncomfortable conversations that we've had all year
I would
because...
imagine. Yeah.
Yeah, because they're like, Tom, we can't... You're telling us not to sell. Because our advice was, don't sell. Like, even though I didn't know where the bottom was, I did know it was V-shaped.
Right.
But they're like, Tom, we can't do that, And then I was like, well, I showed the stat. Whenever the VIX is above 60, and then it closes below 30, 100% of the time it's been the bottom.
Correct.
And they're like, well, it's different because the Fed's not going to save you. So everyone found a reason to actually argue for why a recession was starting. And as you know, economists went full on recession call.
That's correct.
So if you're a equity guy, how can you go stocks are going to do V-shaped when the economist of the firm just said there's a recession? So
Right.
I think they got caught, and we're not having happy conversations with people.
Do you still think this is so you've articulated now that this is the beginning of a new bull market, and I imagine those institutional clients lose their mind when you say that. In a sort of nutshell, why is that the case?
Well, it's fact based because we had a drawdown of more than 20%, and then we made a new high. So like the weird math that like let's say a commodity trading advisor, a CTA,
right?
has is that when you have a drawdown and then you make a new high, that date is the start of a bull market.
In the wake of momentum sparked by the Genius Act, digital asset platform Bullish is aiming to go public in the U.S. The Cayman Islands based firm has filed a registration statement with the SEC for a proposed IPO and plans to list on the New York Stock Exchange under the ticker symbol BLSA. This move places Bullish alongside other crypto companies like Gemini and Grayscale, both of which have also recently filed with the SEC, highlighting a growing trend of crypto firms embracing public markets and U.S. regulations. Bullish, backed by billionaire investor Peter Thiel through Founders Fund and Thiel Capital, already operates a regulated digital asset exchange with licenses in Germany, Hong Kong, and Gibraltar. The platform blends automated trading with a traditional order book to cater to institutional investors seeking speed and compliance. With Washington signaling stronger support for digital assets, Bullish's IPO could mark the start of a new wave of crypto firms going mainstream and reshaping finance from within. Is this the breakthrough crypto has been waiting for? Let me know in the comments. For more Daily Dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.